Good morning, Jags. This is Fahad. Today is Monday, December 4th. Let's get started. The chart that you are looking in front of you is MAXR technology, symbol MAXR. Now it's time to reveal this fantastic topic from the Jaguar fourth quarter outlook. For those who bought the outlook, they have been tremendously benefiting on this stock in the past couple months. And for those who did not buy the outlook, they likely missed out on this opportunity. But as a reminder, once again, in the Jaguar fourth quarter outlook, here's the bull case that was presented when we made this as a top pick in MAXR with a recommendation to buy January 25/40 call spread for $3.70 or less. That trade has gone from $3.70 to $10 today. So it's up more than 200% since that bull case was presented. And if you bought the stock at the time was trading at $26 per share. And now it is right over here, $26 per share. And now it is trading at $37 per share. So it is up about 40% since that alert was issued. So 40% gain in this stock. And by the way, just to let you all know, this is still not the best one that we had in the quarterly outlook. There's another stock that we also had in the Jag fourth quarter outlook that beats even this 40% gain on this position. That's up even better. But anyway, fantastic rally last week. Power candles back to back, as you can tell. Monday, Tuesday, Wednesday, Thursday, Friday, every single day, this thing was ripping higher on very heavy volume. Hit another new 52-week high on Friday, even as the market was selling off. Very strong performance. Now, the reason for this is the company held a virtual event with a lot of the analysts on December 7th last week, which was received extremely positively by everyone. A couple of thoughts that I would like to point out. In the outlook right over here, what I did was I presented a long-term view based on the actual timeline of events in order to try to explain this as a story, as a book. And so, for example, first we discussed what happened in late 2019 when the company started to receive new orders, what kind of orders, and every single thing. And then what happened on April 8th, which was the asset sales. And then May 12th, another strong bookings. And then June 24th, more new orders. And June 25th, an acquisition was announced. Late June, even more new orders. And August 6th, then came a blowout quarter. And that's what happens if your bookings continue to rise sharply. And you have then the revenues essentially start to push higher if the consensus has not caught up yet. This goes back to my point about bookings in excess of billings. And so blowout quarter on this August 6th, and that's what led me to actually issue this as a top idea with a view. By the way, it didn't stop there. We saw even more new orders on September 17. And then finally, a very large NRO award is now expected sometime in the next couple months. And then there's also a big discussion that we had in this stock, which was about Worldview Legion launch. I don't think many people actually realize the significance of this catalyst, how big this catalyst is. This is a huge catalyst that's supposed to happen by mid-2021, and it's going to be the launch of the company's fleet of Worldview launch Earth observations satellites. This has been in the works for the past 3 years, and this is state-of-the-art technology which will allow the company to offer unprecedented 30 centimeter imagery and boost MAXR's daily orbital revisit rate. Imagine having a satellite in the sky somewhere that can look down so fine-tuned that can actually tell you what's going on in real time within 30 centimeters. And so Legion will provide the most precise and continuous real-time 3D models of the planet, period. And then even that's not enough. On the longer term, there's another major catalyst, which is the NASA Lunar Gateway. I won't go into all of that. So for all of these reasons, short-term order book rising and everything else, that's when we presented this bull case and we made this as a topic. And I believe this is still a keeper. There's still substantial upside in this stock over a long period of time. Now, I bring all of this up because the reason why this stock was ripping higher sharply last week is because this is the kind of stuff that we learned from this virtual meeting that took place with the management from the CEO. A couple points over here. for their very important Artemis program. The company is building the Power and Propulsion System, PPE, and the Lunar Gateway Service Module. There's about $70 billion worth of government space market which has been funded, which is driving the demand for the national security purposes. Put it differently, when you have under the Trump administration, we started this space program. We started Space Force. Remember that? The fifth branch or sixth branch of the U.S. military, whatever the number is on that. But that program was started under Trump administration. This company, MAXR Technology, is a key beneficiary of now what is seen as rising trend of more and more allocation to that program, to the Space Force, because of the imagery services that it provides. And it already has been receiving significant amount of orders in that particular area. Then secondly, in this article, this comes from Canaccord Genuity Analyst. After attending that meeting last week, they talk about that not only are there more public options for exposure to the space economy, but investor interest in the sector remains at elevated levels. And this is true, and that's why we have names also like Virgin Galactic and some of the other names that have been beneficiary, which continue to endorse the bull case. So as long as the strong money is following the group, you're going to see these stocks will continue to outperform. And then lastly, there's a key catalyst in play, which is for MAXR in the next few years, which is the activation of its Legion satellite, which was all discussed in the Jaguar fourth quarter outlook. A renewal of enhanced view contract with the U.S. government that was also discussed in the outlook, and the completion of this program for the NASA's Lunar Gateway and the execution of robust commercial geo satellite backlog. The only thing I will mention to you in this one, the biggest thing, keep in mind this company in every single quarter for the last 3 quarters has reached new record backlog. And as a result, that backlog continues to grow on a percentage year-over-year basis faster than the revenues are growing currently. And it gives you and it tells you that in 2021, that growth rate on the revenue, top line revenues will further accelerate in my view. And as a result, this stock will continue to get re-rated higher on the street. And the long-term view, 3 to 4 year outlook remains extremely positive for a name like this. So just a high-level view, just wanted to provide some color. This has been a fabulous win for all of us from the Jaguar fourth quarter outlook. That's it from me. Jay is not with us today, having some tech issues this morning. He will join us tomorrow. So let's go to Chronicle.
Good morning. So we're coming to the end of the year now, and I've been looking ahead to 2021, trying to think of possible themes that I don't see being mentioned at the moment. So with our quarterly outlook discussion coming up, I thought I'd do something different, a little more lighthearted today and tomorrow, which is to share this thought exercise. So I have 5 random thoughts and themes, which I feel are the best out of my list of all the other ideas I thought of. And I'm going to touch on the first 3 today and then the remaining 2 tomorrow. To be clear, some of these are not trades that I have on right now, but rather I'm putting them on the watch list. So let's dive in. Number 1, I think weddings are going to make a violent comeback globally once the pandemic subsides. Like there are lots of anxious, engaged couples right now for whom the opportunity to hold a full, proper wedding cannot come soon enough. Now, obviously, the most direct place for this would be the jewel resellers like Signet, and also the registry and wedding gift retailers, Nordstrom and the like. But also, Jay was pointing out when I brought up this theme that 1-800-Flowers, symbol FLWS, could be an interesting derivative play too. So this is theme number 1. Number 2, because of social distancing, just like all the engaged couples who are waiting for their wedding, there are also plenty of single people who have essentially, quote unquote, lost a year. I think there are a lot of people who may have neglected in recent months and quarters to update their wardrobe and dressers. Now, when I look at a lot of these clothing retail stocks like American Eagle, Ralph Lauren, L Brands, Capri, and also the cosmetic and beauty stocks. These stocks have all run up a lot recently, mainly because of all the modernization and e-commerce upgrades that they've done during the pandemic, plus their earnings results coming in not as bad as expected. And the natural inclination upon seeing these stocks going up a lot might be to say that this is getting overstretched, like they're getting overbought. But let's suppose we get lots of people looking to upgrade their wardrobe and appearances as the virus begins to go away. And if that's the case, I think the ongoing sharp recovery in a lot of these stocks might still have legs because, as I said, we also have to keep in mind that these retail companies have all upgraded their systems during the pandemic. And so they're coming out of this in a much better shape than before. Additionally, a couple of these stocks like American Eagle and Guess, they still have pretty elevated short interest, I'm noticing. So there could be a pain trade of sorts because for the longest time, the market has been pretty bearish on these retail companies due to their lack of innovation. And even though the companies have now invested and brought forward several years worth of digital innovation, there's this sense that a lot of participants are still holding on to their original bearish views and unwilling to pivot, which is why I think the stocks could still go higher. So kind of a contrarian view. This is theme number 2. And then number 3, let's not kid ourselves that just because vaccines are coming out soon, that all of a sudden everybody will be good and then we will all be able to travel everywhere right away. Because it's going to take time for every country to work out a strategy on how to distribute the vaccines and also how to reopen their borders, because not every country has quick and competent government. So if I had to give a ballpark estimate for when I think international tourism can start to pick up again, I would say it's going to be late 2021 at the earliest. But at the same time, as economies continue to slowly reopen and governments look to revive tourism, I would expect a lot of countries to start introducing domestic and regional travel campaigns like what China and Japan have been doing. Now, I have to make it clear that even though 2021 will mostly be a year of domestic and regional travel, I still think a lot of stocks exposed to international travel are going to outperform anyway, because the moment vaccines start getting approved and distributed, I think the market is going to start pricing in anticipated 2022 earnings. So I do expect to see a lot of beaten down travel stocks having a good year in 2021. For example, if we remember back on November 9th when Pfizer announced their vaccine had 90% efficacy, if you noticed, Carnival stock spiked 40%, American Airlines surged 25%, and Sabre spiked as high as 46%. I think we might see more of that sort of price action with more vaccine news. Now, personally, I've been long Leap 2022 calls for a couple months now in a certain beaten down travel stock. Fahad and Jay will know which one it is. And let's just say if the stock doubles by the end of next year from where I entered, it's going to make roughly 6 times the debit. But generally speaking, I think there's lots of such types of potential multi-bagger opportunities and out there and troubled companies within the travel industry going into next year. So I'm treating it as a wild card position in the portfolio because we're currently in a market that loves to pull earnings that are way out in the future. And if I'm wrong and the stock crashes, I'll lose a little compared to what I could have made. So there's no harm. So I'll stop here and then I'll touch on the other 2 on this list tomorrow, which is to do with 5G and EM.
So on all of these, I think number 2, which has to do with the people upgrading their wardrobes and their closets, and the number 3, which is the domestic and regional travel coming back in 2021, far better than international travel. I think those 2 are most interesting points in my view. On the number 2, I read on news because, as you may have seen, these pictures on social media over the weekend, where Pfizer trucks were leaving this facility in Kalamazoo, Michigan, with the first batch of vaccines being distributed. And there was an article that was suggesting that as many as 100 million doses will be available by the end of the first quarter 2021. Now, if we assume that there will be that people will take these vaccine and it will actually really work as the company says, and we start to see graphs of all kinds of COVID cases start to come down and all that stuff, then the fear goes away, and so the traffic in the malls and the shopping malls will certainly remove. There will be no more reason for governors to continue to lock down places and all of that. And so if the goal on the number 2 point here is to see improving traffic in shopping malls, then I think the commercial REITs will also be in play. Some of the domestic focused apparel retailers such as the Buckle, the Gap Store, Abercrombie and Fitch, and American Eagle, many of those kind of companies will be in play. And so there's not just one. I think there's a whole class of people, the class of stocks that could be in play with positive time for the retail industry. And the second one, to the point about number 3 with the domestic travel coming back, I have my own favorites. I don't know about you, Chronicle, but there are 3 airlines that I like the most when it comes to regionals. Number 1 is Hawaiian Airline, HA, simply because this company serves the routes between Hawaii and the mainland America. It's basically a domestic play, and it has lion market share in that very important route. And so this has always been one of those key beneficiaries of any kind of travel to Hawaii, and it gives them the commanding pricing power and all that. Also, it's the pure play between various islands in Hawaii, so Maui to Kauai and so on and so on. And the second one is ALK, which is Alaska Air. Right, this is another great company which has a very specific route with the monopoly there, serving Alaska versus the United States, the mainland. And so it serves a lot of those routes with not much competition there, so it maintains the pricing power and such. But within the continental United States, if we're going to go with one, that would be Southwest Airlines as my favorite, just because it has a still far bigger exposure to domestic airlines and a very, very well-run company that even during this pandemic didn't rely as much on government bailouts as anybody else. And so this would be my top play within the continental US. So just wanted to point it out there on your third theme. You may have your own favorite, but this would be mine. All right, great stuff. As usual, we're going to stop over here, and folks, we'll join you tomorrow. See ya.